Welcome to The Alternative Investor. I'm Nastasia Arendse. Water is arguably the most important natural resource on the planet, and with the growing fears about its availability as the world's population grows and climate change makes it rather more scarcer, it's not surprising that investors are starting to pay attention. The global water desalination market is estimated to be valued at over $32 billion by 2025. Rising shortage of potable water, which is used extensively for domestic and industrial purposes, is expected to drive the market growth. To have a look at the industry and outline the possible investment opportunities relating to water, we're joined by Jaco Eager, who is a portfolio manager at Rand Swiss. Jaco, thank you so much for your time this afternoon.
You're welcome. Hi, Nastasia.
So, people hear about investing in gold, in equities, and all kinds of other commodities, but water seems to be one that you don't seem to think of. Tell me about why investors are, following the water route. What's so special about it?
Yeah, I think you're right. It's not one of the ones we usually talk about. So maybe to start off with, let's zoom out a little bit and rewind to high school geography. And if you think back to that, about 70% of the surface water, of that water, 97% is salt, so it's not potable, so not for human consumption. And then the other of the 3% left, 2% are kind of held in aquifers and glaciers, so there's only 1%. So us as the human race have 1%. Of that water supply that we can drink and use, that's potable, and of course that 1% is under threat. And you mentioned it. Climate change, droughts. We felt that not too long ago. If you think back to the Western Cape drought, California had a 5-year drought a couple of years ago. Melbourne in Australia, for example, 18 out of the last 20 years, the rainfall has been very low there, far below the averages. So that's the one side. The second one is obviously the one we know, population growth. And then the third one, which also damages our water supply, is rapid industrialization. So if you think, mining, you have acid water drainage, all the way through to anything you can think about. Chicken abattoirs, they have also a lot of brackish water they produce. So we need to address those issues.
Right.
So as you mentioned, that one of the biggest ones was desalination or water purification, and the process they use there is reverse osmosis. Now, reverse osmosis is not new, but the technology is rapidly advancing. If we had this conversation 10 years ago, from a reverse osmosis perspective, we would have said it's too expensive, it's not effective enough, but times have changed, and the two biggest problems is the electricity, fossil fuel that it burns, and the second is ecological. So you take seawater, a lot of the extra water that we can't desalinate all of the water, and the rest of it is pumped back into the ocean, for example. So that brings
So for viewers who are listening to what you're saying and thinking, you've just given me something to consider, how do they then get exposure to water investments? How does it work?
Okay, so it's so wide, and I think people don't realize how big a universe we have that you can invest in. So it's all the way from venture capital, private equity firms that invest directly into these these projects, these plants, for example, all the way through to exchange traded funds, more passive, index type investing. And of course, if you're more zoomed into the specific plants, that's a little bit of a higher risk, of course. And if you move away into more passive investing, that's a lower type of risk, so ETFs, index type funds. So long story short is, for almost every pocket size and every portfolio makeup, this makes sense from a diversification perspective.
So building on that then, would this be for an investor with a long-term perspective and somebody who actually is viewing it as a stable investment, I'm assuming?
Typically, yes. Let's chat about that part just for a second. Absolutely. So these plants usually sign off-take agreements. Let's say a desalination plant in the Western Cape, for example, typically sign an off-take agreement with the government, and they actually guaranteeing payment for many, many, many years, 10, 15, 20 years. So these are super long term. So if you have a government-backed inflow of an income stream, as long as you produce what what you said you're going to produce, you have this kind of dividend-like passive investment stream. That's on the one side. So that is the passive side and long-term, fairly stable. But on the other side, these problems we have that I mentioned quickly, solar energy can solve the fossil fuel burning to run all of this. We have one example in Witstrand in the Western Cape, which runs off solar energy.
Right, Jaco, talking to us about the different ways that you can get exposure and some of the risk factors to consider. And it's certainly a very interesting investment development. Some of the things that do affect investing in that space happen to be regulation as well. Perhaps when we do get him back for the next interview, we'll look at the different other ways that these companies are affected. Some of those have to do with financial results. It's very easy to compare financial results when we're looking at similar stocks. But when we're talking about water stocks, they're basically affected by the same thing. So if one stock is performing better than the other, it can be something that can move markets if you are invested in that space. But thank you for tuning in to The Alternative Investor. That was Jaco Eager, who is a portfolio manager at Rand Swiss, talking to us about the various ways that you could have water investments in your portfolio. Up next, we have my colleague Nompumelelo Siziba.